What's up, what's up, what's up, what's up, YouTube? Hey, if you'd like to help out the channel and get some free stock, make sure you check out my link below. Hey, I'm Chris saying, hey, no, I'm just playing. What is up, everybody? Welcome to Trace Trades, where we give technical analysis in different stocks in the stock market, as well as potential buy, hold, or sell opinions on these given stocks. I'd like to preface by saying that I'm not a financial advisor nor expert, so take what I say with a grain of salt. Let's get into the video. Today, my friends, we're going to be showing you my top 5 favorite long-term stocks in my personal portfolio. They're going to be Torchlight, XONE, MVIS, SENS, and AGTC. So we're going to dive into each one of these, why I think that they're great long-term investments. These are all long-term investments, nonetheless, so we've got quite a bit to talk about. We're going to go over the basic fundamentals of the company. Why do I think these are great stocks to get into and hold for a long time to come, right? And I do also want to address something else in regards to how much content I'm going to be putting out. So in the past, I've been putting out somewhere between 5 to 8 videos a day, and I have decided that I am going to be putting out a little bit less. I'm going to be putting out about 2 to 3 videos a day and focusing on the primary stocks that I like to focus on. So like my long-term investments in my portfolio. I will sparingly talk about, my swing trading and that sort of stuff, but I'm transitioning a little bit into, I would like to say, teaching a man to fish instead of, giving a man a fish, because a problem that I've run into with the channel is I see that, when I post a video about a stock, I get follow-up comments every single day for at least a week, 2 weeks to come saying, hey, where's the update on this? Where's the update on this? Where's the update on this? And to be completely frank, I can't keep, I can't update all 80 stocks that we talked about on the channel. So I'm going to be focusing on the ones that I feel, I'm going to be personally holding. I'll talk about future stocks that you guys hold as well, here and there. But I do really want to double down on the fact that, when I do put out videos talking about individual stocks, which I will continue to do, obviously, right? It is going to be incumbent upon you guys, the individual investor or the trader, to make those decisions. And my goal, my focus is going to be showing you my personal strategies and what I would do in your situation so you can take that knowledge, do your own DD and then apply it for yourself. So with that being said, I'm going to keep it as simple as I can. There's a link to the Discord in the description box down below if you'd like to check that out. It's just $5 a month on the Patreon if you'd like to join a community of investors that are really good at that as well. So we're going to start off here with ticker symbol TRCH, Torchlight. This is a stock that I don't feel like a lot of people are talking about, which is actually really surprising because I see so much potential upside here. So I'm going to be focusing on a little bit of DD that I found on the internet. Take this with a grain of salt. This is from Reddit, yada, yada, yada. But I read through this before I started the video, and this is a really, really solid piece. And I'm going to run you through the bare bones basics that I'm finding on here. So what is the why? Why should you care about Torchlight Energy? Well, I'll tell you why right off the bat. They're going to be merging with ticker symbol MMATF, which is Meta Materials. And guys, this could be a huge SPAC sort of play. This could have an immense amount of upside. So MMATF and TRCH. We're going to start off here with Meta Materials. So they've got upcoming catalysts regarding the merger vote, uplisting to the NASDAQ, and access to large capital markets and scaled production. Right now, MMATF is an OTC market stock, and they're voting to be uplisted to the NASDAQ. I shouldn't say voted, but they're being uplisted to the NASDAQ, which is absolutely huge. So that could be astronomical. And I want to focus on why I think they've got so much upside and potential. They're in a variety of different sectors: energy, green tech, aerospace, defense, automotive, medical, and AR/VR. Whoa! So this is a lot of the reason why I like Microvision so much, is they are a disruptor within a lot of different sectors, right? In the technology industry, they've got so much different technology that they can offer to the public, right? They've got their automotive LiDAR, they've got their MEMS system, right? They've got their LiDAR security system. They've got a defense, contract with the DoD, which is huge. And MMATF has a lot of the same stuff going for them. So they've got augmented reality, radar and LiDAR, transparent 5G antennas, photovoltaic films, automotive heads-up displays, consumer electronics, IoT, transparent electromagnetic shielding, right? You guys can read the fine print here, but they've got a lot of different technology, which makes them a disruptor, right? And what's interesting about this is if you look at Torchlight historically, they're a much different company than what you're seeing right here. So we'll briefly run through, some of the different technology that's offered here through MMATF. They've got Interglass Acquisition builds AR one-stop shop. So they've got AR glasses, which is insane, right? They've got their automotive example applications, autonomous vehicles, de-icing and defogging, head-up displays. Head-up displays would be so filthy, dude. Oh, man, I would kill for something like that. If we just look here, they've got their energy applications, right? Medical applications. They're in so many different sectors, which is absolutely huge, right? And then if we look at Torchlight historically, what do you get with this company, right? Well, what you get is a company that was focused on the oil and gas industry, which is obviously not green energy. When I initially looked at the stock, I was like, why would anybody care? Why would anybody care about Torchlight? But people care about Torchlight because they're making the transition, right? This company is changing from a disruptor to a disruptor, right? So they're moving away from this old way of energy and fossil fuels and into this clean energy sector with this merger that could potentially happen and is expected to happen with metamaterials, right? So that is astronomical, right? They've got a couple of different oil and gas assets. They've got Oro Grande Basin. Third-party valuation of potential recoverable hydrocarbons. They've got low side case, 2.3 million barrels, 3.7 million barrels as a mid case, 5 billion barrels as a high case. They've got the Hazel Midland Basin and the Winkler Project. So what I see here with Torchlight and what they offer to the table is capital, right? So how much they end up getting acquired for, is going to depend on how they net that out in terms of how much the company's worth. But they're going to have a lot of capital to sit on once they end up making that transition over to this clean energy sector that they're focusing on working with metamaterials. So that's huge. That's where I see the largest potential upside here. So if we come down here to, the next part, which is the merger, right? This guy already said it himself. This merger is in and of itself proof of the economic transition, taking us from destructive technology to disruptive technology. You can quote me on this. I did, brother. Probably said it wrong. This is an arranged marriage of sorts. It is a catalyst that will allow Metal to bring their disruptive technology to the forefront of several growing sectors, each at or near their inflection point. The board of Torchlight realized that their revenue-rich holdings were not enough to survive and thrive in the changing economy, and that a new path was necessary. This is huge, right? Kathy Wood talks about this all the time. She says, if you really want to move into the next sector of where the army, where the market's moving, right? The market is moving into disruptive technology, right? Clean energy plays, electric vehicle plays, augmented and mixed reality. You've got the autonomous vehicles. All that sort of stuff is where the market is moving. Innovative technology. And this is going to be innovative technology at its finest, right? You're seeing two companies. You've got Torchlight, which has a lot of capital potential, right? You've got Metamaterials that is in a variety of different disruptive technology sectors coming together to form this hybrid company, which is absolutely huge. This guy says here, I'm going to be holding TRCH and MMATF for at least 2 years. I plan on doing the same. This is a great long-term stock to me. And I think something important to talk about is what happens when the merger is approved. So you as a shareholder with 100 shares of Torchlight would receive 100 shares of the preferred stock in the holding company and 100 shares of the new company. So look at this. 100 shares of the preferred stock in the holding company and 100 of the new company. So you get 200 total shares from what I'm seeing here. Torchlight shares will be static. Meta shares will be adjusted to maintain the ratio of 75% Meta share ownership and 25% Torchlight share ownership. So check that out. That's what we're looking at right here. This is huge. This could be a massive merger. And from what I've read as well, we do have, some sort of an expectation as to when this will happen. It is supposed to be middle of March, which is coming up very soon, which is why I think it's important to talk about this stock because nobody really talks about it. So that's huge. I'm going to be holding this stock for quite a while. You could honestly hold either TRCH or MMATF, but keep in mind, if you want to hold MMATF, that is a OTC market stock at the moment before it gets uplisted to the NASDAQ. But you can see here, it has been crushing. It has been absolutely crushing, and they have not existed for really that long. Since September 25th, they brought themselves to the forelight with OTC market stocks. Honestly, if you'd bought in right when they IPO'd, you'd be sitting up so freaking filthy dirty right now, which is what makes this stock a little bit different than most companies. Is they started off as an OTC market stock and pretty much just went straight to the moon right after that, right? It's been a nasty run up. So I think you're not going to go wrong either way. I don't think it should matter a whole lot, right? You can do a little more DD than that. I'm trying to give you a basic overview so that you can make your own investing decisions. But the reason why I'm holding this as a long-term investment stock is because it is a disruptor. It is a great technology play, and you're going to have a lot of capital potential here and potential for revenue growth down the road many years, right? So absolutely astronomical. I love to see these gasoline and oil companies transitioning into green energy, and I think this is just the start. Which is why I want to get in it, right? Because if you can get in the forefront of this and beat the hype before the hype comes, you're just going to be that much better off. So What are we looking at in terms of TRCH right now? Well, we had a little bit of a head and shoulders pattern, right? We got a head, shoulder, shoulder, neckline, ended up bleeding a little bit, but it saw a nice bounce, right? The market was getting beat to a bloody pulp. In fact, I think the market's going to be sitting pretty decent here today, but we did see a nice bounce. So what do I mean by when I say a bounce, right? Well, we found a definitive bottom. So you can see this is a nice bottom out. We got a little bit of a bounce. So if you were to change this over to daily candles, right? What would that look like? Well, you can see that we've got a little bit of a candle wick rejection on the bottom. So it's been in a little bit of a downward trend for a little while now, right? You can see that it bled from $4.83 all the way back down to $2.18. You know, I bought in at maybe not a great time. I bought it around $3.60 on my other portfolio. This isn't in Webull. I don't have this in Webull, but I do have this in my other brokerage account. And I bought in for about $2,000, and all I've been doing is averaging down. And I'm going to continue to average down because I see a lot of potential with Torchlight. I think it's going to be a company that's going to treat you really dang well. Volume was bleeding off a little bit here the last couple days since it's been red, but I don't mind seeing low volume on red days. That's not the end of the world for me. And I think you're going to see the volume and the hype start to really drive up on this as we get closer to that merger date, right? And as Metamaterials and Torchlight, we're closer to becoming one unified company. So what do we have here? Well, we've got a definitive bounce. We've got an engulfing candlestick pattern right here. You can see, right? We saw that bounce. And we are now on an upward moving channel. So we've got an ascending level of support. We always look for at least 3 touch points to signify a respective level of support. We get that here, right? This is a long-term stock, so even if this is mistimed, all that you're looking at is averaging down on your overall cost, and you're going to be sitting pretty dang filthy well. Something that I like a lot about Torchlight, if we look at their annual, spreadsheets, how much total revenue and how much cash flow do they have? Well, if you look at their income statement, you can see that in their 2019, total revenue, it was down a little bit. You can see that it's been a little rocky. But if we look at their cash flow, how much cash do they have? Net income is pretty red, but we've got depreciation and amortization, $4.39 million. Assets disposal, $3.6 million. Working capital change, $1.71 million. All 3 of these are green, right? That's huge. That's huge. That's astronomical. You do want to pay attention to that because that tells you a lot about, hey, look at the income statements. You can see that they're not pulling as much revenue in 2019, which is to be expected, right? We see this huge transition over to green energy, but you can see they've got a lot of cash, which is why this is a huge opportunity and why I think, MMATF is reaching out to Torchlight for this merger acquisition because they both have something to offer to the table. And for Torchlight, it's capital. It's an ability to help fuel funds for them to combine into this nice green energy disruptor play. So what do I think is a good entry point for this? Well, what we are looking for here is a break out of this descending level of resistance. We got it. We got that wide range candle to close above that descending level of resistance. So we're now in an upward moving channel. I don't know why the 200 EMA is not on here, but I'm going to add it here really quick. 200 EMA compared to the 15 MA, you can see that we are trading way underneath the 200 EMA right now, but we do have the 15 MA starting to hook in towards the 200 EMA, indicating an upcoming decreasing in volatility just a hair, right? I wouldn't expect a super volatile day today. The RSI is starting to build up some nice momentum, so that is also crucial and important to watch. And I would expect an upcoming, breakout because we do have that 15 EMA starting to very harshly hook back up towards the 200 EMA. And once it does hook up back to that 200 EMA, you're going to see the volatility start to come back up once it crosses over that line. So that is absolutely huge. I feel very good about this. An entry point to me is going to be somewhere around here at about $2.58. And I say that for a couple of reasons because it respects that ascending level of support. And it also lines up extremely well with the level of support right here with all these candle wick touches. So that would come out to, I would say, about $2.62 or so. We're going to call it 262. 262 is a solid entry point. We're actually trading underneath that right now, but I say that just because, if you can get it even cheaper than that, you're going to be sitting pretty dang well. If we drop below that, right, we retest this bottom right here, I think you're going to be looking at about, $2.25 as an even better entry point. So watch for that. Watch for, a continuation of this ascending level of support if you're looking for that, right? If you want to ride the momentum here. Or if it doesn't continue to respect that ascending level of support, you're going to be watching for a bounce off of 225 as it will likely break right there. So I am super long on TRCH. I'm going to be holding this for quite some time to come. I don't plan on selling this for a while, honestly. And the RSI is starting to get that nice bounce. We got the bounce here right around that 213 level. I do think we've likely come close to the bottom here. I think the NASDAQ is going to have a little bit of a green day today. That is what I've got here for TRCH. Next stock is going to be XONE, XONE, and this is a stock that I've got nothing but love for. So this is a huge company. They are a technology company, a disruptor. This is a stock that Kathy Wood has a large stake in, right? And I think it's important to show you guys, particularly the institutional ownership on XONE. So we're going to just check this out. Institutional ownership on XONE. And what I'm going to pull this up is to show you the huge stake that institutional companies have taken in this stock. 79.19%. Anything over 10% is astronomical. That's huge. That's a huge number. We see that 15.19 million total institutional shares are held out of the total outstanding shares of 19.1 million. Why is this important? For two reasons. One, you can see that the amount of sentiment towards this stock, especially from big buyers, is huge. Two, it decreases the overall flow of shares available to the general public, right? With a decreasement in supply comes an increase in demand. You're going to see more harsh moves because there's just not that many shares outstanding in comparison to the shares being held by these huge institutional buyers. You can see here that on the 16th, ARK Investment did step up their game in XONE. So they bought another 2.37 million total shares, which makes the total ownership of 12.38%. That's huge. That's a huge number. You should pay attention to that. You should pay attention to that for sure. Now, why would I think that ARK would care about this company? Well, we know what ARK cares about, right? It's disrupting technology. And XONE is definitely a company that does that. They are a provider of 3-dimension 3D printing machines and 3D printed and other products, materials, and services to industrial customers. They're industrials, industrial goods, machinery, equipment and components, industrial machining equipment, right? What they do is they have metal and sand 3D printers that are able to manufacture or basically replace a retail manufacturer and create metal and sand materials that would be used for different operations, right? So specifically what I like a lot is the metal 3D printers. You can see that they actually signed a contract with the DoD. So if we just scroll down here a little bit, we'd be able to find this, but the DoD signed a contract right here, $1.6 million contract for their 3D printing factory. So essentially the Department of Defense, the military, paid $1.5 million to create I would say kind of like a trailer that holds all this different, metal 3D printing, sand 3D printing, so that the military can use that to manufacture different equipment and create different equipment that's necessary for military operations. Maybe this means they need to create a casting for a missile round. Maybe this means they need to create ammunition for an M16. Maybe some private lost a pin for his M16. They could replace it there as well, right? So there's unlimited, possibilities that they could use this for, and it's huge anytime you see a government-backed institution step into a company. So I love to see that. We've got huge institutional stake. This is a disruptive technology. This is going to be the way. This is the way. This is the way. And I'm just pumped. I'm pumped for everything that XONE has to offer. Possible downsides for me are hard to find. I'm going to be honest. What we can do here is look at the financial situation and look at their income statement. You can see in 2019, their total revenue was actually down from some of their previous years, which, maybe that raises some concerns. But if we look at their quarterlies as well, you can see that their Q3 of 2020 was green, and it was very green. They made $17.4 million of total revenue, gross profit of about $3.9 million. Only thing that I don't like is the cost of revenue is very high. So their margins are tight. They're not taking home a lot of their money, right? So out of $17.4 million, their cost to make that was $13.5 million, which means their actual gross profit was $3.9 million. So they're spending a lot of money, I think, on R&D, research and development costs, on marketing and administrative expenses, and with technology companies like this, right, when they're early in their age, XONE is a pretty early-based company. If we look at their max timeline, what are we looking at? This company created in 2013, saw a pretty nice run up to about $55. It was pretty quiet for a long time. Now it's starting to move again, and we're seeing that happen. These are monthly candles, right? And it's really starting to go to town, and I think this is just the beginning. So that's a big thing to talk about here. I think their financial situation is going to change a lot. They're really focusing on this technology, this disruptor technology, and this is just the beginning of what I would say ARK Invest and Kathy Woods is really excited about, which is that disrupting technology. So what are we looking at right here? Well, we had a little bit of a downward moving channel for quite some time. It was a major pullback, which I somewhat expected, to be honest, because we saw, it down at $9 and it ran all the way up to $66 in about a month and a half. And it's done a little bit of a correction. So if you look at the grand scheme of things and we zoom out here, what are we looking at in terms of an overall market correction? Well, we can just find out right now. It corrected about 61.8% on the nose, right? That was a picture perfect correction. And it did get that definitive bounce, right? So we are back in a little bit of an upward moving channel. It looks like we're kind of tiptoeing in to break above this descending level of resistance. So we're looking for a definitive break, right? We're looking for a candlestick to open and close above that, to me, to signify that we have in fact broken out of this downward moving channel. Once we get that, I would anticipate that you see a continuation on this ascending level of support. We've got the 15 MA about parallel with the 200 MA right now, which typically indicates upcoming consolidation. Even if it consolidates, right, That's not the end of the world. I am 100% okay with consolidation because consolidation favors buyers, it favors bulls. It gives people the opportunity to buy into a stock when it's not dipping, when it's not ripping, right? Because when a stock is going up or it's just going down an insane and volatile amount, you're going to scare away some investors. And this is an investor stock. This is not a trader stock. So if this does consolidate, I'm happy with that for sure. That is just getting ready for the next leg up to build up to those new higher highs. And this is a perfect opportunity to buy into the stock. I love this setup. Honestly, I'll be honest with you. I did not anticipate we'd see this much of a pullback. I think the NASDAQ and the entire market as a whole pulling back as much as it did, having a little bit of a correction, obviously affected this stock. And that is to say the least. But it does look like we might have found the bottom. If I would say the market's going to correct anymore, I would say it would be somewhere around 3%. 4% maximum, right? Just based on, my previous videos. And if you'd like to check that out, I've got them as well. But nonetheless, good buying opportunity for this is going to be right around, I would say, $34.86. Anywhere between $35 and I would argue $36, $36.50 is going to treat you pretty well. Now, why am I coming up with those numbers? Well, you've got this ascending level of support right here. So about $35 lines up well. And then you've also got this, level right around here at about $35, which is a level of support. So that's going to be absolutely crucial. You can see that we're already gapped up above that right now. So I would watch for anything between $34.50 and I'd say $35.50. You're not going to go wrong buying into this right now. I don't think you're going to beat this price. That is what I've got here for XONE. Next stock is going to be Microvision. This is my baby. This is my favorite stock in the market. And I want to show you guys the total institutional ownership on this stock because I do think that is an important thing to pay attention to, is institutional ownership in a company. I think in the short term, they've got potential for a squeeze. So I'm going to pull up, 95.6. That's huge. But I think in the short term, they've got potential for a squeeze. If we look at their, the utilization rate, it's about 67% or so, 66.73. Cost to borrow is about 6.27. Days to cover, about 1. Anything over 1, I would say, is significant. So on the short term, you've got a little potential for a squeeze here. On the long term, you've got a pretty decent amount of institutional ownership, 21.58%, 31.59 million total shares. And we have AWM Investment that has bought into this back in 2020. So that's the most recent buyer. Nothing critical standing out to me at this point. But I do think down the road, you're going to see some more institutional buyers step into Microvision. We do still have that 21% line, which anything over 10% is a critical number. That's substantial. That matters to me, right? So we've got a decent amount of institutional ownership that is sitting in Microvision right now. All these stocks have treated me pretty well. I have been riding this stock in my other brokerage account since it's been down. I think my average cost is like $6.50. So I'm sitting up pretty dang well on this. I can't complain in the least bit. At the highest point, it was at $24 and I did not sell. And that's because I believe there's an infinite amount of upside here with Microvision. So that is going to be absolutely critical. I do think that's important in this brokerage account. I'm up on Microvision about $106. Down on XONE right now about $345, 10%. But I'm not sweating that in the least bit. I'm not going to be selling any of my position here because I truly believe that it is going to have way more upside than that. In fact, I'm just going to keep averaging down. Ken, for me, is a stock that I got for free from Webull, right, through the affiliate marketing program. And then I've got SENS Stock, which we're going to talk about here. I'm up about $70 on that. And my other brokerage account, I'm up about the same. And then I've got, what's the last one? AGTC, which I've got call options on in here. I am down on those right now, but I've got, a position in my other brokerage account that is sitting up just a little bit. So Microvision is huge because they are a technology and a disruptor company. They're going to be huge because they offer something called automotive LiDAR. This is going to allow autonomous vehicles to do what they do, right? So if we come over here to the website here really quick, and I'm just going to show you their technology, it is really fascinating and good technology. They've got a bunch of different patents. Patents are huge because they're a guaranteed way to generate revenue throughout time, right? So that's critical. They've got a bunch of different MEMS designs, and technology designs, but the one that really catches my eye is this automotive LiDAR, which is coming up much faster than you think it is. And I think this is going to be critical because Microvision's automotive LiDAR, which we're expecting a presentation on in late April, gives it the potential for a company acquisition. You can see this company become something similar to maybe like a Whole Foods and Amazon acquisition, where shareholders receive a cut per $1 billion in acquisition, and you make off very, very well from that. So just hypothetically speaking, these two companies will come up with an overall $ deal per $1 billion. Let's just say it's $7, right? I've seen that number float around. And you get bought out for $10 billion, you receive $70 per share. So the more you own, the better off you are. And I tell you what, I've been taking the opportunity every chance that I can to buy more shares in this company. In my Webull account, I've got 74 at a dollar cost average of $14.56. I will continue to add to my position as much as I can. In fact, I'm planning on selling out of Ken because I've got no interest in that company in the least bit. taking that capital and putting a lot of it into, these companies like XONE, like MVIS, et cetera, et cetera, et cetera. So, I've talked about this stock a million times on the channel. I won't waste your guys' time, but what are we looking at here? We're looking at what looks to me to be a possible bottom. I don't know for sure, right? Nobody knows for sure, but we got a head and shoulders pattern here. Ended up bleeding a little bit, did a little bit of a correction, and we see a big fat George W or a double bottom starting to form here on the charts. So that is huge. That's typically a sign of an upcoming reversal. We do have the 15 MA starting to hook in towards the 200 MA, which would, to me, indicate a decreasement in volatility and a reversal, a bullish reversal, which is huge. Microscopically speaking, we've got another little mini George W, which is typically a sign of an upcoming run. In the pre-market here, we're sitting pretty dang well. If we just look at this, it is up 7.6%. The entire market right now looks like it's going to be, sitting pretty decent in the pre-market here. So I think that, your best opportunity would have been to buy this yesterday. We don't typically like buying in our long-term stocks on green days. So what I would watch for is another pullback down to, maybe about $15.57. We love buying on red days. This is a long-term stock for me, right? Don't worry about FOMO. All stocks come up, all stocks go down. All you need to do is look at this in a long-term macroscopic perspective and see this, right? It's up and down, right? Maybe you would have missed out on this initial move. That's a different scenario here, right? But it's already run a huge amount. It's already run up to $24. So for it to pull back down here to $15.30, that tells you the story. If we were to look at how much this retraced, in a grand scheme of things, it was almost a picture-perfect 50% retracement, which shows a lot of buyer strength, right? I do like to see that. That means that there's a lot of investors stepping into the stock, fighting to keep the price up. And in terms of, retracement, maybe it scared some people away that went from $24 down to, 14 and a half or whatever it might be. But that's not the end of the world. I promise you. It's not bad, right? So that's what we're looking at right now. We're looking at a nice green pre-market. We've got a nice gap up candle. We've got that huge engulfing green candlestick pattern. If you want to buy in today, I think you could buy in at around, this would be about just under $16, $15.75. But if you want to wait for another red day, I think that's your best opportunity here. But, this does look like it could be the possible bottom. We've got a lot of good things pointing in the direction here. The 15 MA starting to hook up towards the 200 MA. RSI down here, the relative strength index, starting to build a little bit of momentum. We've got nice consistent volumes. That makes a predictable stock. Shouldn't be super crazy volatile, right? Great stock. I've got nothing but good things to say about it. This is my girl MVIS, baby, and I'm not going to be selling it anytime soon. Next stock we're going to be talking about here is SENS. And man, I am so sad because the market took a crazy beatdown last week, and they had a really nice conference that ended up not getting talked about. So what does this company do, right? This company focuses on a CGM, a continuous glucose monitoring system. They're a direct, competition. So I would say Dexcom. They're a much smaller company. Dexcom has the G6 system, currently a $398 stock. So you can see where I'm going with this. And their system, their 10-day continuous glucose monitoring system, to me, is inferior to the Sensonics CGM system that is currently utilized, right? So we see that, the Sensonics system runs for 90 days. So I'll just pull up their website here really quick. And that is a huge difference. That's 9 times longer than the current product by Dexcom, the G6. So it's just a sensor that's subcutaneously inserted into the arm. You've got the transmitter, which would directly relay that information over to your mobile app, your smartwatch, whatever you are using to track your data, right? But it's much different than the Dexcom system, which uses a patch that would basically stick to your abdomen, give you those continuous glucose monitoring readings, which is nice because you're not finger pricking, right? But this has a much longer shelf life, right? It lasts a lot longer. And it's, I would say, maybe a hair more invasive. Maybe that's a downside, that's a con. But this is a bull case for Sensonics, right? I'm focusing on the positive points, and you can make your own decisions based off of this. I think they're going to be a big disruptor because not only have that 90-day CGM system, they've got a 180-day CGM system that is going to be coming up here soon, as well as a 360-day CGM system that they're working on as well. Both of those products are awaiting FDA approval down the road. If we look at their most recent news, what can we see? Global Smart Continuous Glucose Monitoring System Market Research, 2020 to 2026. This is talking about that CGM system, which we were talking about here. The research report has incorporated the analysis of different factors that augment the market's growth. It constitutes trends, restraints, and drivers that transform the market in either a positive or negative manner. And we can just, run down here really quick. The research report includes specific segments by type and by application. Each type provides information about the production during the forecast period of 2015 to 2026. Application segment also provides consumption, yada, yada, yada. Segment by type, wearable monitoring system, non-wearable monitoring system. What do we see here? Man, this is a long article. So, I'm not gonna bore you with all of the, the ins and outs of this. But if you'd like to find it, it is the top article on top of the SENS Stock news article release page. It would take me an hour to read through this whole thing with you guys. But this was released on the 26th of February, which would have been, about 3 days ago. And I think it's going to be some positive stuff, right? What we see with this continuous glucose monitoring system is I think it's going to be the future. I think finger pricking is a thing of the past. And for SENS to be really focusing and doubling down on that, right, to me shows innovation. It shows that they're trying to be a market leader in this company. And it's disruptive technology. That's going to be by far the most, I would say, capable system compared to the Dexcom system. So very, very huge technology. It's got a lot of potential. And we're just going to take a quick peek at the institutional ownership here as well. So if we just look at the not AMC, you can tell I've been talking about that a lot. So if we just look at the SENS institutional ownership, what do we see? So if we just take a quick peek here, SENS institutional, well, that's not right. No, let me just find this really quick. Okay, so we've got SENS institutional ownership at 19.31%, 71.8 million shares. You guys are probably finding a common theme here that I focus on companies with a lot of institutional ownership, and that's for a reason, right? So a lot of companies bought into this. We've got the most recent filings on SENS as of February 16th. Quite a bit of a large stake taken here, about 20%. In fact, I think this number is a little out to date, but we're going to roll with the low ball here of 19.31%. But nonetheless, there's a lot of big companies stepping into the game here. SENS is a long-term stock. Don't get impatient. That's my number one takeaway here. Don't be impatient with these stocks, guys. These long-term stocks are going to have day-to-day fluctuations, right? You got to think long-term. You got to think macroscopic. This is going to be your opportunity for this is macroscopic. If you want to really truly capitalize on the potential of SENS here, you are going to need to hold this for some time in order for it to really hit the potential that it's got, right? If we look at Dexcom, this is what I just keep coming back to. Of course, they're different companies. Their financial situations look much, much different. But let's look at the max timeline here. You get the picture. Look at this. $1.36. $1.36 and has run all the way up to $397. The upside here is in the long game, guys. It's in the long game. You need to be patient. You need to be patient, right? So just take that for what it is. I do think that is important to point out. We're going to come back here to the 1 month chart and look at what we have set up here for SENS. In terms of the setup, right, we had a crazy run from 83 cents all the way up to $5.90. It broke that. It's been in a little bit of a downward channel since. You can see that we had a little bit of a false break, drop back down, and now it's retesting this descending level of resistance again. So what we're looking for is for these two trend lines to cross each other and continue upward on that ascending level of support. So we want to see a continuation on this ascending level of support. That to me is going to indicate that we are back in some bullish territory. The 15 MA is about parallel with the 200 EMA right now, which to me indicates some consolidation. Consolidation would break away from that descending level of resistance as well. So either way, I think this is a win-win scenario. I think this is a great opportunity to buy into the stock. It is a little bit green here in the pre-market. We like to buy on red days so that the downside is not as high as the upside, right? But if you want to buy in right now, I don't think you're going to sit too bad. I do think this is pretty close to the bottom. And that is because if we look at, we're going to drop a Fibonacci retracement to begin with here. And I'm going to take a macroscopic viewpoint. So if we just zoom out and look at this from its initial run up way back here down at that 80-cent mark, what are we seeing? Right? We can see a picture-perfect bounce off of 50%. That is a double bottom. That is a George W. in the making, the filthiest George W. that I think I've seen in at least, 24 hours. Because I cover stocks all the time. But that is a dirty, beautiful setup. So I don't mind that at all. I think you are not going to go wrong. I don't see it dropping below that 341 level. I mean, that is a picture-perfect bounce off that 50% retracement. So I think that is significant. I think you're not going to go wrong buying into this right now. And that is my bull case for SENS. Last stock we're going to be talking about here today is AGTC. And man, this stock hits home because if you can't tell, I'm wearing glasses now. These are blue light glasses as well as prescription glasses because I cannot see a freaking thing because of my bilateral anterior uveitis. And this is a company that could actually directly affect the problems that I have with my eyes. So what do these guys do? They're called Applied Genetic Technologies Corporation. They focus on developing groundbreaking gene therapies for patients with rare diseases. They've got a bunch of different pipeline products which catch my eye, right? XLRP, ACHM, optogenetics, dry AMD, Stargardt's, FTD, ALS, non-syndromic hearing loss. Of course, this doesn't affect me at all. But what they're focusing on is basically genome resequencing or being able to find the genetic mutations that cause different eye disorders, right? Whether it's ocular, whether it's the optic nerve, whether it's the retina, XYZ, right? They've got a bunch of different products in the works right now. They're going to focus directly on that. right? So I think that AGTC is groundbreaking technology. And if we look at their investors tab, right, we can just take a quick peek at what they've got coming up in terms of events and presentations. They had a bunch of events last week, which is frustrating me because they got smoked by the bread market. Nobody cared. Everybody was pulling out of stocks while this stock, should have been running really nice and green. But nonetheless, I stand by my statement here in thinking that this is a great long-term stock, and I'll show you a couple different reasons why. So if we look at the institutional ownership on AGTC, I can never type it. This always happens. There's always those guys down there that are saying, man, it was really funny watching Trey trying to type ownership. And I still can't do it. Institutional ownership. All right, here we go. So let me just check this out here really quick. Let's look at what we got. 42.84%, 18.2 million shares out of the total shares outstanding of 42.6 million currently being held by institutional owners. That's astronomical, guys. I'm telling you. You can't make this up. Those are big numbers. And anytime you've got anything over 10% that is significant, you're going to find this common trend over and over and over, because those are all the stocks that I'm looking for long-term investment. Is a company that's a disruptor. They're in the technology industry, the green energy industry, right? The electric vehicle industry. I want them to be an innovator and offer something to the new market, right? Moving forward 5 years, 10 years down the road. And to me, this is a company that is going to be doing that. So a lot of institutional ownership here. It's got a very high price target, right? I've seen numbers floating around by analysts, a 1-year price target between $30 and $35 at its highest point. Low point, the median, I would say, has been about $15. So either way, you hold this for, a year, the potential upside, according to analysts, could be 200%, which is astronomical. And we've already almost hit 10. We went up to 970, and people are going to say, this is a dead cat. Why are you still holding this? Yada, yada, yada. Not a dead cat. There is so much upside with AGTC. You got to think macroscopically, think big picture here. In fact, this is a stock that I would feel pretty comfortable owning some leap calls in. Just because I have that much belief and conviction in the company based on the research that I've done, right? So all these stocks that I've talked about, this is a very bare bones overview, but I just want to show you my personal portfolio, my personal long-term investments, so you can see what I'm looking for in my stocks. Make your own decisions based on that. Add your own flair, add your own, requirements that you're looking for, and you're gonna be sitting pretty dang well based on that alone. So what do we see here? We had a disgusting downward moving channel for quite a while. I think my options calls on this are unfortunately gonna be tough to make back. But if we do end up back in that $10 range, I'll be sitting okay, and I do think that's possible. So in terms of retracement, that was a very, very harsh retracement. If we look at this on a 3-month chart, you can see that was not kind to us in the least bit. We gave back a lot of what we gained, right? But I do think it's got the potential to come back up. In fact, we see it that we have got a little bit of a bounce starting here at that 78.6% retracement. I didn't personally anticipate that we would drop this low. I'll be completely honest with you. I thought it would drop down to around here, $6.50. I was wrong. I'll always admit when I'm wrong, but nonetheless, this is a long-term stock for me. And I think if you believe in this company, you are going to want to buy into this, and dollar cost average down with every opportunity that you've got, because that's just going to increase the capital that you have invested in the stock. And it's going to lower your average cost, so the margins are higher as well, right? We have the 15 MA that's hooked down away from the 200 EMA right here. We have the cross under right here. RSI has found a little bit of a bottom. It's starting to stabilize a little bit. Not a lot of red volume coming out of this. This is huge. This shows me this is an investor stock. Look at all this green volume that pumped into AGTC, and look at the lack of volume coming out on this. I don't mind seeing red volume come out of a stock on the down days, because that tells me this is an investor stock, which is exactly why I'm in it, right? That is critical. And you are seeing that there's a lot more volume pumping into this than there used to be. So AGTC to me is a great long-term investment. I don't think it's going to drop much lower than $5.04. This time I feel pretty certain of it, right? If it drops lower than that, that is going to be a 100% retracement. We do not want that in the least bit, right? So that is what I'm looking at right here, is an entry around $5 if you do end up getting that. It is green here in the pre-market. We are up about 3.74%. So be watching for a little bit of a pullback. If you get it, that is going to be a solid opportunity to buy into the company. I do think 504 is going to treat you well. We got a break out of this descending level of resistance. On the very macroscopic scale of things, what are we looking at in terms of a setup? That is a lonely peak, man. That's a lonely peak. So that we've had the bleed, we got the after effects of that, and now it looks like we have found the bottom and could be on our way, right? We saw a long period of consolidation, a little bit of a dip, a little bit of a rip, right? Coming back down, but it is still stair-stepping higher lows and higher highs. If we look at this macroscopically speaking, right, you can see that it is is still stair-stepping. It is still setting those higher lows and higher highs, which is exactly what we're looking for in a stock that will continue to grow. And that is what I have for the video today. If you enjoyed it, please drop a like. It really does help support the channel, and consider subscribing if you'd like to see more content like this. Lastly, I have an affiliate link in the description box down below for Webull. This is version 4 for the desktop. Great platform that allows you to start trading at 4 a.m. in the pre-market. If you use my link, you get 2 free stocks with the $100 deposit. I will receive a free stock. Great way to support the channel, my friends. And if you're not interested, that is totally fine. I just appreciate your support by taking the time to watch my videos. So that is what I have for you guys today. Thank you for watching, my friends, and I will see you all next time. Peace.